All right. What's going on, guys? JJ Jara here with another episode of Real Talk with JJ Jara. And on today's episode, I'm having the one and only Rondi Lambeth, which in my opinion, brother, I consider you the best as far as credit expert in the whole country. So I'm really excited to have you on my podcast. Welcome.
Hey, thanks so much for those kind words. I appreciate it.
Yeah, no, listen, thank you for taking time of your busy day and busy schedule to give us a lot of info. We're here to give information and to give value to people that follow you and follow me. And that's exactly what I want to do. But before we get started, Rondi, let's just go ahead and take care of some little housekeeping issues here on my podcast. If you're tuning in to the podcast for the first time, please go ahead and give us a 5-star rating. Go ahead and share the podcast and subscribe. You can find me on iTunes, Stitcher, Spotify. I mean, all the platforms you can think of will be there, okay? Go ahead and subscribe so I'll go ahead and continue bringing on great people like Rondi to the podcast. And now it's time for me to go ahead and give you a few minutes, Rondi, and introduce yourself. Please go ahead and formally introduce yourself to everyone here. And most importantly, where can they follow you? Where can they find you?
Yeah, it's Rondi Lambeth, I'm CEO and founder of America's first 100% paid on results credit repair company called Fortress Credit Pro. We're arguably the most successful paid on results credit repair company in America. And it's primarily that we put our money where our mouth is. Our clients do not pay us one penny unless we perform some type of service. And they don't pay us anything for credit repair unless we actually get an account deleted, whether it's a bankruptcy or a late payment, charge-off, collection, short sale, whatever it is. We are the only company in America that charges based on deletions that's actually still in business. A lot of people try to copy my model, and they find out very quickly that you have to be really good at credit repair to charge after deletion. Otherwise, you don't make any money. So they go back to the monthly model. So that's it, man. That's Fortress Credit Pro is my baby, and then I got some other companies as well. But Fortress Credit Pro is the main company that everybody knows me being part of.
Absolutely. Where can they follow you? I know you're pretty engaged on Instagram. Go ahead and share your Instagram handle for everyone.
Yeah, they can follow me everywhere at Rondi Lambeth. So Instagram, Twitter, YouTube. That's the nice thing about having a unique name. RondiLambeth.com and all of the socials, whatever your favorite social is. I'm pretty active on all of them, and they're all at Rondi Lambeth.
Awesome.
If you type in Rondi Credit, you're not gonna have any problem finding me. If you type in RONDI Credit, you'll find me.
And you're absolutely right. When I first started to look into you, you're really quick to find. So if you don't follow Rondi right now, go ahead and follow him right now. Listen, the reason I wanted to do this podcast with you, Rondi, is because there's a lot of things that you covered last time I saw you that I didn't know about. As a matter of fact, if you notice, you remember, I've stepped out of the event to pick your brains on a more personal level because I was like, oh, shit, this is good stuff. I know there's a lot of people out here that we kind of know the basics of what we think we should be doing with our credit, but at the same time, we don't know shit. And so I wanted to bring this to our audience so they could go ahead and get more educated as far as personal business and business credit. But also, before we even go any deeper onto this, Rondi, how you got into credit repair? What made you want to get into such a crazy line of work?
Yeah. You know, I grew up in Idaho, outside of Boise, in a shack. It wasn't until I was 15 years old that I lived in a home that had running water or electricity. So the shack that I lived in, the bedroom that 6 of us siblings shared was smaller than my master bedroom closet now. No running water, no electricity. We had an outhouse. We burnt tires for fuel. And we got our food out of a dumpster. Every Wednesday, we would go after school. We'd go to the grocery store and get our food out of a dumpster, and that's what we ate. So I grew up really, really poor. And why I was able to move into a home that had electricity and actually get my very first toothbrush and more than one pair of socks and one pair of underwear and clothes was I left home when I was 15 years old. I got tired of being beaten up all the time and tortured, and so I left. My brother, who's 10 months younger than me, him and I decided that we were done. And so we moved out. And I ended up moving to John Day, Oregon, where I was born. In John Day, I went to work for Wally Williams, who owned Driscoll's Mortuary. And at 15 years old, I became a funeral director. And at 16, I was a licensed embalmer. And I went through high school as a funeral director and an embalmer. But I wanted to, because I got to see so much death, I kind of wanted to be on the front end of that. And I want to be a fireman. I never, it was weird. It was not like I wanted to be a fireman as a kid. I didn't really think about my future as a kid. All I thought about as a kid was, how am I not going to get the hell beat out of me? And when am I going to get some food? Because I was hungry. And so I never had that mentality of cars and goals and women and houses. And it was simply, I just want to survive tomorrow.
Wow.
Or until tomorrow. And so I ended up leaving Oregon and I went to Denver, Colorado, got accepted to the fire academy and become a fireman. And I went to work for Littleton Fire Department. I was on the busiest rescue in the Denver metro area, saved hundreds and hundreds of lives, including the kids at the Columbine High School shooting. I was the third firefighter there at the Columbine High School shooting. Wow. And I actually, my partner and I are the ones that found the 13 kids that were shot in the cul-de-sac. So with that, with being what I thought was Superman, here I am saving 12, 15 lives a day. And when you're doing it, it's just your job. You don't feel special or anything like that. You like the pride of what you're doing and you like the reaction from the public, but you don't really think of yourself as a hero. You're just doing your job. But fast forward, my little brother, who wanted to be like me, wanted to be a fireman, and he became a fireman as well in Oregon. And while I was out saving strangers' lives, he was struggling financially and with his relationship with his girlfriend and some other personal stuff. And he ended up taking his own life over a few $1,000s of medical bills. And it really hurt because I felt a tremendous amount of guilt. One, because I left all my siblings at 15. I felt very selfish that I left them to take care of me. So I always had that guilt.
Yeah.
And then two, here I am helping strangers and I don't even know what's going on in my brother's life. Right. So that really hit me pretty hard. And I decided I wanted to do something before the 911 call. And after doing some research about suicide, I found that 5,000 Americans every year kill themselves over credit-related issues. And when I dig a little bit deeper, the number one cause of divorce is financial problems. Number one cause of financial problems is not understanding money and credit. Number one cause of disease and illness in America is stress. And the number one cause of stress is financial and credit issues. So I kind of went on this mission to where I could back it up a little bit and start on the financial side and the credit side and attempt to save millions of lives versus a couple dozen lives. And so I started America's first paid on results credit repair company. And that was really as a charity. I never started it as a money thing. It was simply to help people get their finances in order and get their credit in order to make a difference in their lives. And it just kind of grew into this monster that it is now, to where I actually make a very good living. And I get to help, hundreds of thousands of people every year impact their lives, their credit, and their finances. So that's how I got into the credit repair industry.
Thank you, Rondi, because a lot of people don't share personal stuff like that. And so when I first heard you mention that last time I saw you, that impacted me. Things started to click. But when I meet people that are passionate about what they do, there's something bigger. There's a bigger why they're doing what they're doing. And so when I heard you say that about your brother, it clicked, because I could tell that you're really passionate about helping people with their credit. And so when I heard you say that, it clicked. So thank you for that. And now, because of that, you obviously helped thousands of people with credit issues, which you said earlier, one of the biggest reasons people have problems, just general problems, they start and they originate from financial problems. And so if we have financial hardships, they're going to go in and go into our personal life. And that ultimately, it's a snowball effect that leads into arguments and sometimes, ending relationships, and which is not a cool thing. Thank you for that, Rondi. Now, listen, why do you think people have a hard time with their credit? Why do you think it's like a unknown thing? Is it a lack of education, credit education? What is it? What do you think that's the number one reason people have a hard time with understanding their credit?
I think the number one reason that people don't understand credit is misinformation that's put out there by the credit bureaus, by the banks, by the mortgage companies, that's then spread to the public through mortgage brokers and real estate agents and aunts and uncles and fathers and mothers and cousins. And I don't mean that in a derogatory way, that mortgage brokers and real estate agents spread misinformation. They're given misinformation. So they are spreading what they think is correct in an attempt to help their clients, but they're giving the wrong information. So when they go out and tell their clients that information, it's wrong. I believe it's done on purpose in an attempt to keep people confused about their credit. Because if people understood how to increase their credit score, how to manage their money the proper way, we wouldn't be, 76% of Americans would not be paycheck to paycheck. And I also believe the government encourages this through our school system, because when you have a group of citizens that are in debt to their eyeballs, and they have $13 trillion of student loan debt and $13 trillion of other consumer debt, they're forced to work. And when you're forced to work, you're forced to pay taxes.
That's right.
Whereas if you understood credit and money and taxes, you could do what you want to do versus what you have to do to survive. Mm. And when you have to do what you have to do, you become complacent with taxes and money and credit, and you just do your thing. You go to work, you punch in, go home, whatever, watch TV, drink some beers, and you don't really pay attention to what, not the 1%, what the elites and the governments, the Clintons, Bushes, and Obamas are doing behind the scenes. And so I think that's why. And I think it just, credit is one of those things. There's just a lot of misinformation out there about it.
It really is, Rondi, and I'm glad you brought it up. See, I'm in the real estate world. I do real estate. I help people buy, sell, invest. I do some of that myself. But I also have a huge following of people that also do the same thing. And so the fact that you brought up the fact that sometimes us as professional real estate agents, brokers, we don't know the F we're doing. And by the way, it's not that we're trying to hurt our clients. It's just we share what we know. And a lot of times what we know is not the correct information. Instead of helping our clients, we're kind of messing up their credit. And so I wanted to go and do this because, again, this is going to help a lot of people in the industry understand the basic fundamentals on your credit 101 and how's the best way to help our clients. What's the best information to give our clients? Should we even be giving them advice as far as credit? Shit. And if so, What is the one thing or two things that we should just kind of put out there, and then the rest let a pro like you or your company to take over?
Well, here's what I would say. And here's the thing. I owned a real estate company. I had 26 real estate agents that worked for me. And I was just as guilty before I got into the credit industry. I thought the way to have good credit was to keep 30 to 50% balances on your credit cards, because that's what we're taught, 30 to 50%. That's not true. If you keep 30 to 50% on your credit card, one, you're going to pay a lot of interest, and two, you're never going to have a great credit score because you're losing 30 to 50 points. And I'll explain how that actually works. But what I'd recommend is, and you're doing it right now, you are promoting credit education. And the problem with our YouTube society that we have is anyone can go online and start a YouTube channel. Anyone can start a podcast. It's so easy now to do this. I remember in 2010, I got my first radio show. I was on 7 days a week, 400 different stations, and I converted it to a podcast. And podcasts were not very popular at all. And I got over 2,200 episodes on iTunes called Credit Repair Radio. So, that's a good place for people to go. Some of the stuff is outdated because, like I said, it's from 2010 to 2007. And then I have a new radio show or new podcast called The School of Wealth, where I break down the fundamentals of credit and finances and taxes. So to answer your question, you just got to be careful on who you ask advice for or from regarding credit. And if you follow me on Instagram or YouTube or on my podcast, you're going to get the right information about credit. I spend a tremendous amount of time every single day digging into the credit game because it changes on a regular basis. And so I'm a professional credit educator, not just a guy that's running a credit repair company out of his mom's basement, sending stupid, silly dispute letters to the credit bureaus, hoping they'll miss something. That's not what we do. We are professionals at what we do. So I'd recommend, people just follow me or there's a couple other guys that are my friends. John Olsemer is one of them that has lots of good information out there.
Got it. So before we wait till the end, let's go ahead and share your website where they could go ahead and log in, because after I spoke to you the last time, I went on your website, I signed up, and like many people, there's some questions that need to be answered, and there's some things that I needed some help with. And I just go straight to the pros. I don't know shit about credit repair. I don't know where to start, and I much rather pay a professional that has a good record on helping thousands of people to get it done for me. So where can they go to log in right now to go ahead and start the credit repair process?
Yeah, so it'll be in your show notes, but it's rondilambeth.com. And when you get to rondilambeth.com, you'll just click on credit repair. Here's the thing. You were there a couple weeks ago when I announced to the room, it was the first time I made that announcement, that, I started Fortress Credit Pro in an attempt to help people. And I just started making money on it because we were so good that people would come to us and say, I'll pay you if you can get me in a mortgage purchase situation in the next 30 to 45 days. So we take people from a 400 credit score to 700 credit score in 45 to 60 days. And so people started throwing large amounts of money. And so I turned it into a business. But over the last 13 years of doing that, there's a lot of people that we turn away because they just don't have any money.
Right.
And I meet thousands of people every single year at these events that they want to hire me, but they don't have, $2,000. And that's what our average client will pay us, because our average client has 20 different accounts and we charge $100 per account on our paid program. So a couple weeks ago in Beverly Hills at the event, the Montage Hotel, which was an incredible hotel, by the way.
It really is.
I announced that I'm going to offer my services for free. So if they go to rondilambeth.com, they click on credit repair, there's two options. There's the VIP service, which is our paid program that generally takes 12 to 18 weeks to fix your credit so you can qualify for a mortgage. That is $125 per account. So if it's a bankruptcy, it's $125. If that's all you got, there's one account, then you pay us $125. If you got 20 items, well, it's going to be more expensive, and we have a payment plan for that. But you only pay us after we get deleted. Second option is the free service. And the way that works is you sign up for a credit monitoring service, which any credit repair company you hire is going to require credit monitoring. I own my own through Credit Mojo. It has an API through my CRM for the credit repair. And so it makes it very seamless, and that's how I can afford to give it away for free. But know this, it's not going to be fixed in 12 to 18 weeks. I spend a lot of money on labor and other things that I have to get that fixed in 12 to 18 weeks. It's going to be a little bit slower than that, but it's free. It's absolutely free. We're not dragging it out like these other credit repair companies because, you're paying them $120 a month. There's no hurry for them to fix it. You're not paying me a fee. You're simply paying for the monitoring service that I have to have in order. It's kind of the X-ray, or in your world, the MLS of real estate.
Yeah.
You know, if you want to sell a house fast, you got to put it on the MLS, right? So if they go to rondilambeth.com, click on credit repair, there'll be one of those two options. They can either sign up for the free service, which is cool with us. They can sign up for the paid service. They can sign up for free, switch it over to paid later, or vice versa. But I just want to help some people.
Good. Now, Rondi, I know you mentioned when I first heard you go through the ideal rules and guidelines as how to obtain an 850 credit score. That to me threw me off because I didn't know. I thought it was a little different. But when you threw out the ways to obtain an 850 credit score, that was pretty impressive. And that was pretty really good information that you gave us. So share with our audience how to obtain an 850 credit score, because I know you have percentages that you have to go into 5 different areas.
Yeah.
So please.
Yeah. So that's the FICO. You're referring to the FICO. I always do that. The FICO pie chart.
Yes.
And the FICO pie chart is the 5 areas of how they create your credit score. So number 1 is what everybody hires me for, and that is the payment history. It's 35% of your credit score is based on whether or not you pay your bills on time. 35%. Here's the big problem though, JJ. Everybody focuses on the 35% and they ignore the 65%. And it's the 65% that's most important, right? Because it's 65% of your score.
That's right.
It's kind of like bodybuilders. A lot of people think, I'm just going to go to the gym, I'm going to do cardio, I'm going to do weight training, and they forget their diet. The diet's the most important part.
That's right.
Right? So you got to put them together. So number 1 is 35% of your credit score is based on payment history. 30% is based on how much you owe on your debts. 15% is based on length of credit history, how long you keep an account open. 10% is going to be on what type of credit. And then 10% is going to be on new credit. People think new credit means inquiries, and that's not the case. Over 90% of all late payments happen in the first 2 years of opening an account. And so you kind of get penalized when you open a new account. But here's what the public doesn't know. Anybody who's seen the FICO pie chart, you say, okay, there's my 100%. That's how I get my perfect credit score. What you don't realize is that FICO chart is almost exclusively on credit cards. FICO does not care how much money you owe on a mortgage. They don't care how much you owe on a student loan. They don't care how much you owe on a car loan. So if you went out and bought a $300,000 house and you use no money down, they don't care if you have a maxed out mortgage. It does not even come into their formula. Now, you max out a credit card, you're going to see a significant drop in your credit score. So when I give you those stats, you got to realize that's about credit cards. Here's where most people screw up. They don't have the proper amount of credit cards and they're using a debit card. Now, why does this matter? Because FICO, the Fair Isaac Company, is the #1 trusted credit score model out there. There are others. There's Vantage, there's TransRisk, there's multiple different other models, but it's FICO that the majority of the banks look at. And so you need to understand your FICO credit score. And when you go online, and it's a very common question, why is my credit score different online than what the mortgage broker? 1, what you see online generally is not FICO. And 2, it's a completely different model that your mortgage broker is using. Mortgage brokers, by federal mandate, have to use the software that was created in 1996. Now think about that. Remember you asked in the beginning, why do we have this confusion around credit scores? The federal government requires banks and mortgage companies to use a 1996 model, a model that's 24 years old. Can you imagine if the government said, you have to use Windows 95 on your computer? It doesn't make sense. Why do they do that? Because a large portion of our federal government's income, because they make money, is off of interest, off of FHA mortgages. How do you charge more interest? by artificially deflating people's credit scores by making them use FICO Model 2. FICO Model 2 is completely different because it was created 24 years ago versus FICO Model 10. FICO Model 10, you'll have a much higher credit score because of the way they're looking at credit, because credit in 2020 is different than what people did in 1996. So that is the FICO chart. That's how you obtain the 850 credit score. However, that's not, I like to teach the 3-1-1 rule, which is the proper amount of credit cards, which you need to have at least 3 credit cards open at all times, not 1, not 2. You need 3. If you don't have at least 3 credit cards, you can have more, but you have to have at least 3 open credit cards. These are not debit cards. These are Visa, American Express, Discover, MasterCard. They could be a JCPenney's, Sears, Victoria's Secrets. They can be, Old Navy. Those are credit cards. I don't recommend those. Never close them if you got them open. There's nothing wrong with having 15 different credit cards, but you need to have at least 3 credit cards.
Okay.
With those credit cards, they have to be used every single month. So I have in my desk right here, I have 20 creded cards. And each one of those credit cards are used every single month. Now, I do not carry them, but they're used. So Netflix, Starbucks, cell phone bill, electric bill, water bill, sewer bill, car insurance, so on and so forth. All my little bills, I put each bill on a different credit card. I set up the credit card to pay itself off in full through bill pay. And so then I only carry 2 credit cards that I use on a regular basis. The rest are on autopilot. They're just little charges hitting them, keeping some activity going. So 1, they don't get closed, and 2, FICO doesn't ignore them. Balances. This is the most important thing with credit cards, other than having them. How much money that you spend a month, or how much money you spend on a credit card. It's called credit utilization rate. If you have $1,000 credit card and you use $100, that would be a 10% utilization rate. You're using 10% of your limit. If you max it out, you're 100% utilized. For every 10% that you use on your credit cards overall, it will cost you approximately 10 points.
Oh, wow.
So if you have a 600 credit score and your credit cards are maxed out and you want to have a 700 credit score, simply pay off all your credit cards, wait for it to report, you'll have a 700 credit score. It really is that simple. So just keep in mind, every 10% you put on a card is going to cost you 10 points. So these are some of the things that you can do to increase your credit score and get to that 850. And the 850 is kind of like a goal. If you shoot for the stars, maybe you'll land up on the moon, kind of saying. If you shoot for an 850, maybe you'll end up with an 800. Here's a fact. As long as you're over 740, it doesn't matter. Once you hit 740, there is no difference, absolutely no difference whatsoever between a 740 credit score and an 850. It's still the same financing applies. It's excellent credit. Drop below 740, there is big differences there. Anything over 740, so you don't have to be an 850. I've only seen it once, and it was my friend John Olsemer. Took him about 6 months and he worked for FICO, by the way, for 27 years. So he knows a lot about FICO, but it took him about 6 months to line everything up perfectly to get an 850 credit score. The next day he went and used his credit card to get a tank of gas, pulled his credit, and he was back down to the low 800s. So it's virtually impossible it's kind of back to the bodybuilder thing. You see these guys on stage, Mr. Universe, Miss Universe, they get down to that 3-4% body fat. They're there for one day, then they're back up 7-8%. It's almost impossible to maintain that for a long period of time.
So what you're saying is it's the whole 850 is just a big hype, a big myth, but it doesn't really make a difference whether you're 740, 750, 800 or 850. It doesn't really make a difference after 740 and up. So if your credit could use some help, make sure you click on the affiliate link on the description box for more information.
It won't make any difference at all. It's kind of like an A versus an A+. It's still an A. You still pass. And here's how the scores work. For you guys that are listening right now, if you're driving, don't do this. Just really pay attention to it. But if you have something to write with, get out a piece of paper, get out a pen, and write 300 to 850. So this is something I like to do at all my events. I'll write down 300 to 850. That represents the FICO score model. And I'm going to explain how FICO come up with that and what it really means when a bank or a creditor looks at your credit score and you got a 300 versus an 850. So in between the zeros on the 300, put a period. So it should read as 30.0, so 30.0. And then put a period between the 5 and the 0, so it looks like an 85.0. So it shows as 30.0 to 85.0. Now put a percentage behind both of the zeros, so it's 30% and 85%. That is what that score looks like to a bank. There's a 30 to 85% chance that you are going to pay your bills over the next 2 years. That is all FICO is trying to do, is predict the future on whether or not you're going to have a major derogatory item hit your credit in the next 2 years. They're extremely accurate at creating the future. So when you see a 550 credit score, that represents to the bank there's a 55% chance that that consumer will pay me. When you see a 740 credit score, there's a 74% chance. Bankers like 74% chance more than 55. Now, once you hit 74, 740 to 850 or 85%, there's not a big difference there. And so the bank doesn't care if it's a 80% chance or 75% chance. It's the same in their world or in their eyes. But that's what that 300 to 850 looks like to a bank. So now when you look at your credit score and you think, well, why did I get denied this credit, this line of credit? I have a 680. Well, that's only a 68% versus someone with a 740 to 74% chance. It might not seem like a big difference, but it is a big difference to the banks in their algorithm, what they figure out who's going to pay us and who's not.
Yeah, yeah. And it makes sense. I mean, now that I look at it, because I wrote it down, 30% versus 85% is a huge difference. It's just a higher risk to the bank. Now, to go back to the balances on credit cards, I've heard for a long time, Rondi, that's why I say I'm just so glad that you're here. Forever, I even told my kids, which, you know, I have older kids now, I remember always telling them, do not charge no more than 30% on your credit cards. But that's baloney. That's like BS because now that I know you, I follow you. You say ideally 10%, but if you can stick between 5 and 7, that's a good percentage. Tell me more about that.
Yeah. So the real number, what FICO wants, and I'm a FICO certified credit professional. There's not very many of us out there. It's a special course that we had to take through FICO, and you had to get I believe it was a 95%. When you took the test, you had to be at 95% or higher to qualify for this FICO certification as a FICO Pro. The real number is 1 to 7%. So that's what they want to see your credit utilization rate, between 1 and 7. And then 8 and 13 and so on and so forth. So 7% increment. I like to say 1 to 10 because it's just easier for people to remember.
Yeah.
So every 10% you put on your card, you'll lose approximately 10 points, right? The reason for that is there are many banks that will report closed accounts as active and paid as agreed. And FICO knows they're closed. I have one right now. Capital One is on my credit report, shows I have a $50,000 credit limit, which I did at the time. That card's been closed for 3 years. It's still showing open and still shows paid as agreed, and it hasn't had any activity since 2017. FICO knows that it's a closed account, even though Capital One forgot to update it in their system. So FICO will kick that out of the algorithm because there's no activity. And this is why I say you have to use your cards every month, because if they're open and you're not using them, FICO thinks they're closed, and so they kick them out of the algorithm. The problem with that is, let's say it's your $30,000 credit limit card and you're using your $3,000 card. If they kick the $30,000 out, you just lost $30,000 of available credit, which screws up your utilization rate.
Yeah.
And then it screws up the FICO pie chart, and now your score tanks.
Makes
So
sense.
if you use the card every month, FICO will give you credit for that credit card.
Makes sense.
So the 30 to 50% that's spread by the banks. Recently, I saw that on Instagram. It was like 2 weeks ago. This guy had a couple million followers, and he claims to be this credit guru. And he put on there, make sure you keep your credit card balance between 30 to 50% and never pay them off in full every month, which is ridiculous. If you don't pay them off in full, you pay interest. There's no reason to pay interest just so you can have good credit. And FICO doesn't care if you're paying interest. FICO only cares what's the likelihood of you missing a payment over the next 2 years. And how do they figure that out? The number one way, how many credit cards do you have, and how much are you spending every month on that credit card? Go over 10%, you lose 10 points. So the real number is try to keep it below 10%, but above 1%.
I love that. Thanks for clarifying that, Rondi. Now, I have a question here, and it's a personal question. What's the best way to help somebody start new credit? Say one of your kids, a teenager. What's the best way to do that, Rondi?
Yeah, that's a great question. What I've done and what I've said over and over again in TV interviews and podcasts and stages is put your kids on your credit cards as an authorized user. This is a great strategy. So you can put your kids on as an authorized user at 2, 3 years old. My grandson, he's 8 years old and he's got a high 700 credit score. Wow. He's 8 years old, right? Why? Because he's on my credit cards that have been open for 15 to 20 years. So it looks like he's got a credit file that's 20 years old and he's 8 years old, right? And FICO doesn't care. The credit bureaus don't care because it's more money for them because the banks have to pay to report. The banks want you to have them on there because you're more likely to spend more money. The more credit cards that are out floating around, the more likely you're going to use them. So the best way to increase your children's credit score is to put them on a credit card. Here's something else I recommend with married couples. You need 3 credit cards of your own. But instead of getting 3 credit cards that are joint, I recommend the wife gets 3 credit cards, the husband gets 3 separate credit cards. Then you put each other as authorized users. And so now you have 6 credit cards on your credit report versus just 3 that are combined. This also helps down the road with divorce. We have a 70% divorce rate, roughly. And with divorce, what I see is people get divorced, if everything's commingled, they close all their credit cards. Divorce is hard enough without screwing up your credit. So that's another reason I recommend having separate accounts and then putting each other on as authorized users. I'm an example of that. I got divorced last year, and it was really simple. The finances were simple. We simply took each other off of our credit cards as authorized users. We didn't have to close any credit cards. She kept her cards. I kept my credit cards. We didn't owe anything on it. Everybody's happy. It didn't ruin each other's credit. I don't have to worry about her not paying her bills. She doesn't worry about me not paying my bills. And she doesn't see it if I go out to dinner with someone on a date anymore because we're separate. But when you're commingled, you're stuck. You're still married to that person. And the only way to get around it is to cancel the card. When you cancel the card, you lose anywhere from 50 to 100 points because it starts damaging your credit and it kicks you out of the low risk algorithm into a high risk algorithm. And now FICO takes points away from you and now you have crappy credit.
Makes total sense.
Authorized users is a great way to help your kids.
Yeah, it makes total sense. Good. I mean, I have a shitload more questions on the personal credit, but why don't we do this? Why don't we transition for a few minutes on the business credit? Because I know a lot of people want to know about the business credit. I want to know more about the business credit. I asked you a lot of questions last time I saw you. And so let's go ahead and do that. But I want to take a moment and remind everyone, if you're here listening to a podcast or you're on YouTube, go ahead and go to Rondi's website. Go ahead and get some help, get some stuff off your credit. and just go in there and play with it and sign up either for the free credit system that he has, or the paid version, whichever it is. He's here to help you guys. Now, I just want to let you guys know, remind you guys, I am an affiliate with Rondi. So go ahead and if you go and do sign up with him, go ahead and I'll make sure I put my link that you can use when you sign up, and we'll go ahead and help each other out like that. Now, Rondi, let's go into business credit. My first question, what's business credit?
Business credit. Business credit is just like personal credit, except it's under your business EIN number versus your Social Security number. 85% of businesses in America do not use business credit. The problem with that is they run out of money. I don't think it's coincidence that 85% of all businesses fail in the first 5 years due to lack of money. And I believe if they would establish their business credit up front, they could stay in business a lot longer. But what business credit is your business, if it's an S corporation or C corporation or LLC set up as one of those two, it's an own legal person, and you can establish credit in that company's name. So think about it this way. If Bill Gates wanted to go buy a jet, Bill Gates is not going to go down and apply for a loan in Bill Gates' name. His CFO at Microsoft is going to go down and apply for a loan for the jet, not Bill Gates. So even though Bill Gates is the shareholder or whatever his thing is, the Microsoft jet will not be in Bill Gates' name. It will not be in the CFO's name. It's going to be in Microsoft's name. For example, my Ferrari, it's in my business name. It's in a business loan, does not show up on my personal credit. My American Express Platinum, that's got $1 million credit limit. It doesn't show up on my personal credit. It's a business credit card. Same thing with my airplane. It's a business loan. So with business credit, it allows you as the business owner to get funding in the business name and not jeopardize your own personal credit if things go sideways. So that's what business credit is. Just instead of using your Social Security number, you use your EIN number.
Who can obtain business credit?
Anyone that has a business. So a real business, not a, if you just go and say, I've been talking about dog poop businesses a lot because there's somebody in my neighborhood drives around $100,000 Range Rover and he on the side says, I pick up dog poop. So it's a great way to make some extra money. But in order to get business credit, it's got to be a real business. It can't be a sole proprietorship or just Sally's hair cutting and Sally takes everything in cash. You have to be either an S corporation, a C corporation, or an LLC that's set up. And you have to have an EIN number, which is employer identification number. So as long as you have that EIN number, it represents a Social Security number, and you can build business credit if you have a real business. And I say real because a lot of these people will call me and they're like, yeah, I got this idea of a business. It's like, I have an idea of having more kids someday. Doesn't mean I have a kid right now. You have to have the kid first, right? Before you can name it, get a Social Security number for the kid, get a birthday for the kid. You got to have the kid first. Same thing with the business. You got to have it first, then you get the Social Security number for it, the date of birth, which is the date of incorporation, the address, the phone number, and all that stuff. So if it's a real business that files a tax return, I guess that would be the simple answer to that. If you file a tax return, you can get business credit.
So how many years does a business, a real business, need to file tax returns in order for it to qualify and be considered a real business?
There is no requirement on tax returns. What I teach with my business credit program is how to get funding with no financials. In my live events, I will set up a corporation during the event. And over the next 30 to 45 days, I'll update my students through our platform how much credit I've gotten. And I've literally gone, set up a company on Monday and obtained $100,000 of credit on Friday.
Wow.
So there is no tax returns. I barely even have a bank account. But I've done it so many times, I can do it that fast. On average, your average business owner will take about 3 months to get this setup. If you're running a legitimate business and everything's in order and the foundation is built properly, the moment you log into my system, you're going to be applying for credit.
Awesome.
So if you know how to do it, you can set up a business today and apply for credit tomorrow.
Okay. So my son, which introduced you earlier, he's here right next to me. He started his business last year. He runs his media marketing business. However, he's not an S Corp, LLC, or nothing like that, which is something that I'm encouraging for him to do. Will that be the number one step that you say for someone like him as a new business owner to get started in order for him to get business credit?
Well, he's not a real business yet. He's still an idea of a business in the eyes of the law.
Okay.
Think about it this way. You go by JJ.
Correct.
Right? What does it say on your birth certificate?
What is that name?
Yeah.
Yeah, the name is Juan, Juan.
Okay. What's your legal name?
So it's Juan Jara.
Okay. JJ is a nickname.
Correct.
So back to your son. His business is an extension of him right now. It is a nickname. Until he incorporates, it is a nickname. It's just part of him. Once he incorporates, that's the birth date of the business. It is at that point that it becomes a real business that he can build business credit. And if you want to pay a lot in taxes, never incorporate. I had this conversation last night with somebody who was at my house, and it's really frustrating for me because I see so much misinformation being spread by CPAs and bookkeepers. Dude's been in business for 17 years, makes a couple $100,000 a year, has never incorporated because he didn't want to spend any money on the incorporation, which is like $125. And so instead he's paying 20% tax, $40,000 a year for the last 17 years on tax that he's not legally required to pay if he just incorporates. So with your son, every dollar that he makes, he's going to have to pay self-employment tax. It was roughly 20%. If he incorporated, it wipes out that tax. So if you want to save a little bit of money, incorporate. Even if it costs you a couple of $100 a year, and in California it's like $1,000 a year because that's what the communist government of California does, is they try to choke you out in fees and penalties. But it's still cheaper to pay the $1,000 franchise tax fee than it is the self-employment tax on every dollar that you make. So I highly recommend you incorporate it as soon as possible.
Got it. So he's here. So hopefully take some great notes. Now, why should a business owner obtain business credit?
So they can stay in business. The reason they go out of business, they run out of money. And if you want to stay in business and you want to beat the odds, there's an 85% chance you're going to be out of business in 5 years. It's because you ran out of money. When you establish business credit, one, you don't run out of money, but two, it doesn't attach to your personal credit. So it doesn't jeopardize your personal credit report, doesn't jeopardize your personal finances. It allows you to scale your company so much faster than credit cards. Again, back to credit cards. If you had a $5,000 credit card, which the average credit card in America right now issues $8,000, according to bankrate.com. So let's round that up to $10,000. If you had three $10,000 credit cards, that would be $30,000 available credit. How much could you use of the $30,000? How much could you use without having a negative impact on your credit score? There was the rule of 10%. You could use $3,000 without it having a negative impact on your credit score. I don't know about you, but my business will now run off of $3,000 a month.
Yeah.
It will run off of $3,000 a day. Right? Now, switch it over to business credit. The average line of credit issued for business credit is $30,000 per credit card. Now you have 3 of those credit cards. Now you have $90,000 available for business credit. With business credit, the more you use the card, the higher your score goes.
Wow.
So if you max out those cards, your score goes up. If you max out a credit card that's in personal name, your score goes down. So to answer your question, why would you want to build business credit? So you don't screw up your personal credit and you stay in business.
Yeah.
Now you have $90,000 that you can use, which still for my business is not enough, but it's a start. But now I got 90 grand versus 3,000 I could use if I was running it through person. I teach how to get these credit cards with no personal guarantee. So let's say my business does fail. I don't have to file bankruptcy now. It's not going to screw up my credit. They're not going to come after my cars. They're not going to come after my checking account. They're not going to garnish my wages when I go back to work for someone else because it's non-personally guaranteed. The business goes out of business. We shut it down. We issue a death certificate through the IRS. Essentially, that's what it is. We resolve the business. It goes away. There's no bankruptcy needed. There's no collection calls. There's no damaged credit when everything is non-personally guaranteed.
Say a brand new business owner wants to apply for a business credit tomorrow, and through your system, they get approved and they follow the steps. What's your average credit score that a new business owner could start with? Or do they even give a credit score to a brand new business owner?
No. So the business owner is not going to have a credit score until they establish 3 to 5 lines of credit with the Wave 1 vendor. So they're going to have at least 3 to 5 lines of credit from vendors that are reporting to Dun & Bradstreet. Once they have those, they'll go from no score to the equivalent of an 800 FICO score. And you can do that in about 45 to 60 days. Oh. So think about it. Personal credit is going to take you 10 to 15 years to get to an 800. Business credit, 10 weeks, you're going to be at an 800 FICO score. Now, it's not a FICO, it's a PAYDEX score, but it's the equivalent of a FICO score. It's an 80, equivalent of the 800. You can do it in about 10 weeks versus 10 years on the personal side.
Wow. So
there's certain things you have to do. You can't just incorporate this morning and apply for a loan tomorrow. You can, but you're going to do a personal guarantee, and now you're using a personal credit again. What my system teaches is how to obtain lines of credit, credit cards, loans with no financials, no tax returns, no personal credit checks, no bank statements. You fill out a 1-page application, you send it in, you get approved for money.
Nice. Now I'm taking notes. Okay, so bear with.
Yeah, that's fine.
Without.
Yeah, business credit's the way to go if you're a business owner. And there's no limit. Like we're helping a client right now. His business is 5 years old. He's getting $50 million. $50 million, and he's only grossing about $5 million. So he's getting a 10x on his gross revenue. Think about how fast he can scale that business. He's got a big vision of what he wants to do with this IT company. There's no chance he could do that with personal credit. None.
Yeah, never.
But with business credit, it's really not that hard for him to get. I mean, believe me, it's difficult to get $50 million. It's time consuming, a lot of paperwork, but he's going to get it. It's not like running a marathon hard. It's just a bunch of paperwork.
When somebody gets business credit and now they establish their credit lines, what's the average percentage on that credit that you pay back on those credit lines?
Well, you mean the average interest rate?
The interest rate, I'm sorry. Yeah.
So on most of the credit cards that I'm getting my students is 0% for 6 to 18 months. And then after that, it's the same as all the rest of the credit cards, anywhere from 10 to 20%, just like, the rest of the Capital Ones or American Express or whatever, because they're about the same. But the difference is you get the 0% interest, and you'll get balance transfer checks almost every single month, which means you can just move them, and then you get another 6 months to 12 months of no interest. I have a program where if you have 2 years tax returns, you're not a felon, you never defaulted on a federal loan, and you got at least $100,000 in profit in your company, I can get you $350,000 wired to your bank account in about 10 business days. And that interest rate right now is about 6%, 10-year fixed, no collateral.
Oh, wow.
So you have a 2-year-old business, you made $100,000 last 2 years, fill out the application. 2 weeks later, you got $350,000 sitting in your bank account at 6% interest. You can use that money for anything you want. You can go buy real estate with it. You can go fix and flip with it. You can go buy a car with it. You can do Facebook advertising with it. You could go on vacation if you wanted. That does have a personal guarantee because it is an SBA loan, but it doesn't have any collateral. So you don't have to put your house up for it, or you don't put up your kids' birth certificates. So it's non-collateralized, which most SBA loans, they want everything. They want your dog, everything.
I mean, this whole business credit is great. Thank you for all this, Rondi. So my son wants to get started. He definitely needs to get started business credit. What are the 5 steps? Because I know there's 5 things for people to do to obtain business credit. Let's go ahead and go over every single one of those 5 steps for somebody to get started.
Now, these are what I call the foundation. You know, when you build a house, you got to dig a small foundation. You don't have to get crazy. It's just a house. When you build a 100-story building, you got to dig for a long time and make sure that foundation is on bedrock or granite. And it works that way with business. If you want $50 million of business credit, you got to have a strong foundation.
Yep.
So number 1 is you have to have the company named, a proper name. Anything that makes the banks nervous, they're going to reject it. 85%, roughly 85% of all applications the banks receive every day are fraudulent. And the reason for it is there is no Fair Credit Report Act that protects businesses from banks.
Okay.
So for example, if I wanted to pull your business credit right now, I could. For $35, I can pull it. If I want to pull Walmart's credit, I could pull it. Apple's, there's nothing that says that you're protected. So I can pull anybody's business credit. So let's say I want to commit some fraud and I want to pretend to be Apple, one of the richest companies in the world. I can pull their business credit. I can see who they have loans with. I can see their addresses. I can figure out their EIN number. I can set up a new PO box outside of their headquarters, and I can start applying for business credit cards. And some of them will go through. I go max them out, and I never pay them. Right? So with that, the banks want to feel safe. And anything that makes them nervous, they immediately reject it. So number 1, you have to have a name that doesn't scare them.
Okay.
So anything that has to do with real estate is going to scare them. Anything that has to do with consulting is going to scare them. Anything that has to do with loans is going to scare them. They want a non-descriptive name. So for example, my company, Fortress, is a horrible name for business credit. I named it 13 years ago when I didn't even know what business credit was. Recently, I applied for a loan. They immediately turned me down because I said I had some liens and judgments against me. I went and pulled my LexisNexis report, found out there's 400 companies named Fortress in America that had judgments and liens against them. None of them, which was me. But the bank, as soon as they put my name in, it popped up, judgments, tax liens, immediate denial. What I learned from that, I don't apply for business credit under my name, Fortress. I have other companies. So they want names that are simple. Like one of my companies is called M25. That's my real estate company that holds my apartment complexes. M is in Matthew 25, which is my favorite Bible verse. M25 LLC. That's it. There's only one M25 in the entire world. It's my company. So you want to name it something nondescript. If you've already named your company, you can still build business credit on it, or you start a new business and name it something nondescript. They want a phone number that's listed with 411. Banks are still using Fico Model 2, which was developed in 1996. Banks are very slow to change. Bankers are very conservative people. They still rely on the phone book. I don't know about you, but I don't have a phone book in my house. I haven't seen a phone book in years.
Same here.
Banks still use phone books.
Wow.
If you are not listed at 411.com, the online phone book, you will get denied. Next will be a website. You have to have a website, a .com, not a .net, not a .me, not a .la or whatever, .com. So JJ Sells Real Estate Fast is not going to work for a name.
Okay.
And if it's JJ Sells Real Estate Fast at info, it's not going to work. It has to be a .com.
.com. Okay.
Next, email address. You can't use JJ's the best realtor in the world at gmail.com. They are going to reject you every single time. It needs to be a professional email. It could be JJ at fastrealestate.com. They don't care that part. They just don't want to see a Gmail. If they see Gmail, they're going to reject you.
So no Gmail must have no Gmail must be a .com.
Must be a .com, cannot be Gmail. Has to be listed with 411, has to be real name, has to be incorporated, and I think I'm missing something in there, but
you are
what it is right
you are. Let me help you out because I'm going over your notes.
Yeah, help me out.
An address.
Oh, the address. Thank you so much. Yes, the address. The address has to be the same.
Yeah.
So the address has to be the same on the state article incorporation, has to be same on your EIN application, has to be same on your bank account, has to be same on your credit cards. Cannot be different. So you can't be doing business in your garage and then using an office across town for something else and then using a different address for something else. Everything has to match. There's nothing that says you can't do business in your home. Nothing at all, especially in today's world. Just don't lie about it. Don't say that your home is a, class A 30-story building when it's, a 3,000 square foot house in East LA. Everything has to match. So your address has to be the same across the board.
Okay.
And here's the other thing. The I's need to be dotted, the T's need to be crossed. So if you incorporate and it's M25 Inc. and it's INC period on the state's website and it's INC no period on your EIN, and then you apply as M25 and don't put Inc. at all, now you got 3 different names they're going to deny you. Everything has to match. Does that make sense on the matching the part of the names?
Yeah.
Everything has to match.
Okay. I had all that written down. Okay. Rondi, I mean, look, we could go on and on and on because there's a shitload of questions that I personally have for business credit. So if you're a critic, use some help. Make sure you click on the affiliate link on the description box for more information. However, I think this is really good. I believe that what we covered so far, it's going to be really good for the audience and whoever's going to be listening or watching us on YouTube. Again, share where they can follow you, where they can find you. And again, I'm going to tag you in all this everywhere we're going to put you. But just go ahead and share where they can follow you and get some more info as far as credit repair, personal, and business.
Yeah, they can find me on all social media platforms at Rondi, R-O-N-D-I, Lambeth, L-A-M-B-E-T-H. I'm the only Rondi out there. Unless it's a fraudulent account, you'll figure it out pretty fast if it's really me. I go live almost every day. I go on stories every day, almost every day. So I'm very active on all platforms.
You are.
So whatever their favorite platform is. I have tons and tons of video on YouTube. I also have 2 different podcasts on iTunes. So if you type in Credit Repair Radio or Rondi Lambeth, you're going to find me anywhere you go. And then you can also go to rondilambeth.com where I have lots of free stuff. I got free books on credit. I have free books on how to remove inquiries. I got just a lot of good stuff out there online at Rondi Lambeth. So I'm pretty easy to find.
I know you do, and then that's why I wanted to connect with you, Rondi, because I've the first time that I met you and I saw you on stage, you threw out some great nuggets, and then the second time, which is not so long ago, when I saw you here in with Albert, I definitely wanted to pick your brains more, and not only for me, but I wanted to go and give this information, great information, out to everyone that follows you and follows me. So thank you so much. I want to thank you for taking time out of your busy day and doing this for the audience, for the people. I know it's helping me. I know my son, he's taking some great notes, and I know he's going to implement it. He's starting his business, and it's really cool what you said. He's run off a nickname. He's not a real business until he gets incorporated, and so thank you for sharing that. I'm sure he's going to jump on it. He liked the fact that you said that you could give business credit $30,000 per account once everything's already put down in as far as for business credit. So thank you so much, Rondi. Any final thoughts that you want to share with the audience here before we wrap this one up?
Here's the thing: your credit score is the most important number in your life. Everything that you buy in life will cost more if you have bad credit. Your gas, your water, your sewer, your food, your clothing, your car insurance. They're looking at your credit scores. And what I mean by gas, sewer, water, electric, if I go and I buy a gallon of gas and I pay with cash or debit card, let's say it's $3 a gallon. If I pay with my American Express, it's $2.95 a gallon because I get cash back every time I use that credit card. So and when you look at the amount of money that we spend on our debit cards and cash, 2 to 5%, it doesn't seem like a lot, but if you spend 20, 30 grand a year, 5% of that, it's a free vacation every single year.
That's right.
Your credit matters. So get the credit score as high as you possibly can.
Absolutely. Rondi, thanks a lot. Again, I want to thank you. And we'll definitely stay connected. But for now, I hope you guys enjoyed this episode. Please comment, share, and subscribe to my podcast. And also, I'm going to go ahead and tag you, Rondi, for your podcast. You can go out there and listen to your podcast. You have a lot of great content out there, great content that people could relate to and implement in their credit. So I like the fact that you said that everything's about credit. Everyone's going to judge you and pay a little more attention if your credit FICOs are higher. That's just how it is. That's the kind of world that we live in, which is okay. Rondi's here to help us out with our credit. Rondi, thanks so very much for being part of the podcast. So next one, let's go.